Hello, my name is Michael Kvistad. Thanks for joining us today. This is part of the series of webinars that Beresford Booth does with an aim to help share with what we do and hopefully give you some hints on what we do and some insight and help you with your own businesses or in your own life. Yeah, my name is Michael Kvistad. I work in the business mergers and acquisitions group. We're specialized in primarily mergers, acquisitions, which is buying and selling companies, representing companies on the whole, like general counsel, also starting up new companies, and also deal with real estate and buying and selling real estate, often in terms of companies owning those for investment purposes. And today, as you can see, I want to talk about asset protection, which is what I talked about in my previous webinar as well. And that one I focused heavily on insurance. And this one, I'm going to talk a little bit about insurance as well, as you'll see in relation to the fires in California. So in this case, I want to talk about kind of maximizing your benefits in terms of liability protection and asset protection when using LLCs and having adequate insurance. And I'd like you to think of these through use of a metaphor. As you can see here is a picture of a medieval castle with walls, big walls around it, and a moat in front of it, or actually it surrounds it. This is just a close-up. But if you have an LLC, if you own real estate, for instance, and you have an LLC that owns it, the LLC are like the walls around the company. A properly set up and managed LLC provides protection from you personally and your other assets that are not owned by the LLC from potential creditors. That's a very valuable way to approach a business, especially with real estate, because you can kind of separate these properties and sources of liability into separate LLCs to protect your other properties. But those are just the walls around it. And if you dig a nice deep well or moat around your castle, you're further protected. And that's what insurance does. Insurance is that first line of defense, protecting your castle, aka your LLC, from any unforeseen events or potential damages. And together, the LLC walls, so to speak, and the moat, the insurance coverage, form a real comprehensive protection for your, in this case, real estate investment. And choosing the right amount of coverage is, of course, critical. Understanding your insurance needs can lead to serious consequences, obviously. But one thing that came to mind recently with the California fires is with those fires, of course, when the house burns down, you still own the property, or an investment property burns down. You still own the property. You may have a mortgage that you still have to pay. And you should get money from your insurance company to rebuild or help you rebuild. But that money might not come for a long time. You still have to pay the mortgage. It's always an issue. But when that money does finally come to rebuild the house or the investment property, as in our example, there's a couple things to keep in mind when getting your insurance in the first place. One type of policy, and the policies are there to determine, an important element of the policy is to determine you have sufficient coverage. And it's one of the most important decisions you'll make. Of course, there's different types of coverage, and I talked about those in the previous webinar. There's different protections marketed for landlords, but basically they fall under kind of property insurance and liability insurance. And when talking with your insurer about the cost of rebuild under your property insurance, there's a couple ways they go about it. One is replacement cost value, and the other is actual cost value. Replacement cost value basically ensures that you can rebuild or repair your lost building, for instance, to fire, to its original condition without accounting for depreciation. That means the insurance will cover the cost of replacing your property or your repairs with materials of similar kind and quality that pre-existed prior to the fire damage. Actual cost policies tend to cost more. They're just more expensive because you get higher coverage, but they also provide some peace of mind knowing that if disaster strikes, we have a backup pile of cash to give us back our house. Another type of policy is actual cash value. Actual cash value policies give you the payment from the insurance company is the actual value of the asset at the time of the loss, including wear and tear and any depreciation. So if the I don't know, the bathroom tile new costs $10,000, but it's 15 years old, and the actual value of it then is $3,000, maybe you get that $3,000 to repair what would cost $10,000 with actual cash value, as opposed to the replacement cost value, you get that full $10,000. So there can be financial gaps with actual cash value. For instance, a 10-year-old roof might need repair, but you may only get a portion of the actual replacement cost with actual cash value. But they do cost a lot less. And so it just depends on, I shouldn't say just, but one of the considerations for this, whether you're getting replacement cost value or actual cost value, is whether you want to be paying more for insurance to so the insurance company can pay for what maybe you can't afford down the future or just don't want to pay for, versus actual cash where you just don't want to pay very much up front, because if there is a loss, you have funds to pay for it, and you're not willing to pay for higher premium insurance. And so whether you're a homeowner or a real estate investor in Washington, having sufficient coverage really is kind of non-negotiable. It's an integral part of protecting investment property, especially when thinking of that moat and castle walls metaphor. And like I show here, there's two types of coverage. We discussed those, and I would just caution you to regularly review and update your policy to ensure that you keep up pace with inflation. That is not fun to do at all. Now, with car insurance, this happens too, and you take a look at the values, you got an idea, maybe you're looking for a new car, maybe it's a little easier. When it comes to property insurance, the house or investment property is just such a bigger asset. There's more to play, and a lot of times we just don't know what those replacement costs are. If you've built your own house, you built commercial property, you know that costs per square foot have gone up dramatically the last 5 years. So when you think of the insurance I got was great for my house back when we bought it in 2015, but it turns out that the cost per square foot is now 2-3 times higher. Just for example, I don't know off the top of my head, but it's higher. Maybe your policy just won't cover you for the full amount. That's kind of in addition to that replacement or actual value, but it is something to keep in mind when reviewing your insurance policies. So if you have any questions concerning asset protection regarding LLCs or insurance, please feel free to reach out. My email and phone numbers, including my direct line, are on the screen. And also, if you've got any questions regarding mergers and acquisitions, also, please give me a call. It's all stuff I like to deal with, and I love helping people navigate those issues. Thank you very much.